$67 billion. That's the staggering figure behind NextEra Energy Inc.'s recent acquisition of Dominion Energy Inc., marking the largest utility deal in U.S. history. This isn't just about consolidating power. It's a direct response to a seismic shift in demand. The driving force behind this unprecedented merger is the insatiable hunger for electricity from artificial intelligence. Data centers, the physical homes of AI, are demanding more power than ever before, pushing traditional energy grids to their absolute limits. For decades, utility companies operated on predictable growth models. They built infrastructure to meet steady, incremental increases in residential and industrial consumption. But AI's emergence has shattered that equilibrium. In 2023, data centers accounted for roughly 2.5% of total U.S. electricity consumption. Projections now suggest this could surge to 7.5% or even 10% by 2030, a growth rate that demands immediate and massive investment. NextEra and Dominion, two giants in the utility sector, recognize that individual companies might struggle to fund the necessary expansion alone. Mergers like this create the capital scale needed to build new power plants, transmission lines, and substations. The scale of these investments isn't just about megawatts. It's about billions of dollars. Constructing a new, large-scale natural gas power plant can cost upwards of $1 billion, while a nuclear plant can easily exceed $10 billion. This isn't just a U.S. phenomenon. Globally, countries like Ireland are seeing data centers consume over 15% of their national grid capacity. The AI revolution is a global stress test for energy infrastructure. The challenge isn't merely generating more power, but delivering it reliably. AI workloads are highly sensitive to power interruptions. Even momentary outages can cause massive financial losses for data center operators and their clients. This drives utilities to invest heavily in grid modernization, including smart grid technologies and energy storage solutions. These are expensive upgrades, but essential to meet the new demands. The NextEra Dominion deal signals that utility megamergers are likely to become a recurring theme. The industry is effectively re-rating its growth trajectory, moving from slow and steady to rapid, AI-driven expansion. This consolidation allows companies to achieve economies of scale, spread out the immense capital expenditure, and leverage combined expertise to navigate complex regulatory environments and build out infrastructure faster. The long-term implications are profound. Expect higher utility bills as these investments are passed on to consumers. Also, look for increased pressure on renewable energy sources as AI's demand for clean power intensifies. If you'd like to know more, please subscribe and follow. First, for businesses evaluating data center locations, scrutinize local utility capacity and future expansion plans. Don't just look at current rates. Investigate their investment pipeline for AI-driven demand. Second, if you're an investor in the energy sector, focus on utilities with strong balance sheets and a proven track record of large-scale infrastructure projects. These megamergers will favor the financially robust. Third, for consumers and policymakers, understand that AI's power demand is a fundamental driver of energy policy and pricing. Advocate for diverse energy portfolios, including renewables and advanced nuclear, to mitigate cost and environmental impact. Finally, and most critically, businesses relying on AI must integrate energy resilience into their core strategy. Power is no longer a given. It's a strategic resource that requires careful planning and investment in backup solutions.